You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs on the old network for you guys to choose from when you're done listening to this episode, of course, including many, many archived episodes of Volatility Views. And you can, of course, find all that goodness at our site, the Options Insider. Click on the Insider Radio Network tab, top left corner of the homepage, and you're off to the races. All the shows pop up there. You can download, you can stream till your heart's content. Of course, while you're there, also some breaking news from the options market, a lot of analysis, education, unusual activity, all that fun stuff, all there on the site for your reading, education, and pleasure. And of course, if you just want the radio, just want a hardcore stream, mainline the radio, we don't blame you. It's good stuff. We like it. You can also find it any of your favorite audio stores out there. So you're talking iTunes, TuneIn, Stitcher, the Aha Mobiles of the world, of your favorite podcatchers, Pocket Cast, Downcast. I don't care what you guys use. There's no shortage of ways for you guys to grab our stuff. And of course, you can just grab our mobile app, puts it all in one convenient place for you. That's available, of course, in the iOS App Store, the Google Play Store, and the Amazon Fire App Store. All right, and joining me on the old Vol Views program today, the man, he hasn't been on this program in a little while. Some of you folks may have missed him. Others, it might have been, hooray, he's gone. But now he's back. He is the Rock Lobster himself, beaming in from the hinterlands of Maine by way of the old pit. Mr. Rock Lobster, welcome back to the program, sir.
It wouldn't be an Option Insider radio program if I didn't take umbrage right away from the opening. Right away.
What fun would it be if there were no umbrage to take, sir?
I don't know. I guess everybody has an umbrage quotient per day.
I'm glad that I could meet and indeed exceed your umbrage quotient every single day you're on this program.
It's a gift that keeps on giving.
Yes, that's my job. If I've met or exceeded your umbrage quotient for the day, then I know that I'm doing my job correctly. And speaking of doing my job, it's time to start doing just that and dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, like the man said, this is indeed the Volatility Review portion of the program. The portion, like the man said, where we look back on the week that was from volatility trading, analysis, research, all sorts of fun perspectives. And of course, we are recording this on Friday, October 2nd, for all of you playing the home game. And as we are recording this, bit of an update on the old street. Nothing to write home about, nothing super significant, but at least it's all unanimous, all in one direction today. The SPOO's up about 5 handles and the Dow up commensurately. The Q's up as well. VIX Cash ticking off a little bit, about half a handle or so. Nothing too crazy. Of course, we are recording this again on Friday. In the wake here of non-farms, and there was earlier in the day a bit of a sell-off, you might say, post non-farms as the market a little bit spooked. But we appear to be erasing that, and now are in the portion of the show, Andrew, where we flip the script and rally. So that appears to be see what we're doing for the rest of the day. We'll see if this continues throughout the show. If this is kind of just a little bit of a bounce, but we have been seeing this last couple of sessions, at least, Andrew. This kind of more pronounced intraday volatility. We had a decent range in the S&P yesterday as well, and certainly if today continues to follow the course it's on now, I think we're in store for that today. So give us a little bit of what caught your eye in today's activity, as well as, of course, the rest of the week from a vol perspective.
Well, how about the 2% from the low today? Bounce.
A little bit of a bounce,
That's
a wee bit of a bounce.
32. Since we are on volatility views, and I miss our old lion, Mr. Schlesinger, but that's a one-day realized move of like, that's pretty big. That's like a 36 VIX, 36 volatility move.
There's some vol and then there are hills, is what you're saying?
Yeah, 16, 32. So, and I mean, this morning, all the vol products were up and everything was down. And it is not like that anymore. So I don't know if this rally will hold up, but it's still another 2% move. VIX Cash is down another 0.75 of a point. The volatility futures that were once up pretty decently today, although the futures aren't moving a lot. They are officially now, I believe, in kind of a contango. The October future is still pretty expensive, but at least we're in contango to the back to the forward month. So that's the first time we've had that in weeks. So we'll see if it stays.
Yeah, that's a significant development in and of itself. You're right, and we'll get to all that. I was, of course, a little bit facetious there at the top of the show, and not much cooking. Of course, we had quite an intraday range already, hitting as low as 1893 this morning on the old S&P. We're hovering over 37 handles higher than that now, listeners. So some action out there. Mr. Rock Lobster, of course, these are the days that are frustrating for folks like us in the content business, because some of us like to prep shows a little earlier than the show is actually on. And today's one of those days where you write up what appears to be what's going on, and then you have to tear it up about a half an hour before the show because it's a completely different script. So I hope you feel my pain on a day like today, sir.
I feel it a little bit, but luckily you have such talented co-hosts on this show that we could perform the yin to your the yin to your yang on this particular topic.
That's why we keep you on the program, sir.
And another amazing thing is also we're starting to see the back month vol futures drop a little bit. So, the jobs number wasn't too good, and I guess some Fed guy came out and said even though we have this jobs number, we don't see any reason for changing course. I think that was a Bullard thing, and he's kind of a hawk. So he's still saying, why should we change course? I don't know. Yeah, and of course, I don't even know what that means. Does that mean we raise rates or not? So
yeah, what course are they on now? They're
it.
On the course because they say they want to raise rates, but who knows? They haven't done anything yet. So is that really a course? It's beyond my comprehension at this point. Don't really know what's going to happen, but they're totally it is a fairly solid bounce kind of all across the board. So, and they're hitting the volatility futures to boot. They've been smashing kind of the skew the last few days. So now I know why. People are not
whatever the market is, they weren't too comfortable at 2100, but they seem to be so at 19. And that's where we are, I think.
Yeah, it has been amazing to watch the evolution in so many different areas of the product just throughout today. Of course, you hit on the VIX futures term structure. I have it here. We pulled it here from this morning, where of course it was still pretty backward. And you're right. Now we're kind of. I'm trying to think, Rock Lobster. How long has it been since we've had like a firm, demonstrable contango here in the VIX futures? Has it been pretty much the better part of a month, if not more? Right.
At least. I can't remember, like, till before we had the big crash. I'm pretty sure. I mean, I think they tried to go into contango for one day after, like, 2 weeks ago when we had that short, like, literally when they just sold off vol real hard. It was after Yellen spoke and they released the minutes and But it was literally for 20 minutes, and then everything snapped back the other way like a rubber biscuit, basically.
Rubber biscuits. You make a lot of those out there in Maine, do you?
We actually make whoopie pies in Maine, I won't even ask
what those are.
The rubber biscuits to the tourists.
I won't even ask what those are. It's funny. We got the data we talked about on the last week's show about how long VIX Cash has been elevated over 20. There's no one out there tracking, at least to my knowledge, the length of time that the VIX futures were strongly backward and out of contango. That might be an interesting chart to see as well. I'd imagine it probably would correlate pretty well with that elevated VIX Cash chart, but you never know with things like this. Speaking of elevated VIX Cash, we are still, like I said, still managing to hover over 20. Of course, we've hit nearly 25 today out there in VIX Cash. It is, of course, trending down now as things have turned on into full rally mode. We'll see if the day progresses, if that could break through the 20 handle. If that does, that will break the streak. We are currently on 28 days, closing over 20 in the VIX Cash. You guys recall last week we broke down the full list for you out there. And we, of course, have moved up that list since then. We're hovering, vying for the number 18 spot. We are trying to vehemently displace the big vol run we had back in Valentine's Day of 1990. Apparently, that was a very volatile period. Of course, Mr. Rock Lobster, you, of course, remember the great Valentine's Day vol spike of 1990.
Valentine's Day vol spike. I'm trying to remember what I was doing. I was a clerk. That was as we were starting to get into Gulf War I, I think. That was the last time I believe so. Things started getting kind of messy.
I thought that was later in the year, but you're right. That could have been, things could have obviously led up to when the actual invasions. That could have certainly have been 1990, a bit of a rock and rolling year out there in the Middle East. So that certainly could have been the cause.
I know that was a low. And I don't think we've seen it. That year was the low for the Dow, and I think literally the low was like 2742. That's 2000. I think 2,300 and something. And that was when, I guess, because everybody was worried about oil, the oil shock from Iraq and Gulf War I. And that whole year was just, the sentiment was awful. And then 1990 leading up to Gulf War I and 91. And also we had the first financial crisis that I can remember when we had the savings and loan debacle, when everything was blowing up there. So I think that kind of started a really bad pitch for 1990, and it didn't get a whole lot better until 92 or 93.
Let's see. Maybe since you missed the show last week, and I'm going to assume you haven't cheated and looked at the notes for today, it's probably pretty easy to guess what the longest number one extended period above VIX Cash the 20 level is. It was probably obviously that 2008 range going into 2009. That was 331 days. That's the number one spot. What would you guess, Mr. Rock Lobster, is the number two extended period over 20 in the VIX Cash? I'll give you a hint. It was a pretty long one, almost 240 days. When did it come to an end is the question I'm asking.
Wow. When did it come to an end? VIX over 20? Oh, I'm going to say 2000 to 2001 came to an end probably, 2001 to 2002 would be the last one. That whole end of the end of the dot-com bubble.
That would probably would have been my guess as well. Actually, that's a couple down. That's number 4. and number 6. Number 2 is actually June 30th of 1999, when a period of nearly 240 days over 20 came to an end. So that the end of the dot-com boom, a little more volatile than perhaps we remember. You know, we all remember it as just straight up. And yet,
so the dot-com, so that June 1999, it was still booming.
Yes, it was still booming.
Finally took, because oh, you know what, too? I think, Mark, because it was also picking up the Russian crisis, and the vol jumped, and then the equity market took off so fast that the volatility never came down.
Yeah, I was out in the S at that time. I remember there being a bit of an upside vol crash for a while. Some of that probably playing out here as well in that time frame. One of the few sustained upside vol crashes I experienced. First time you see that in your career, it's kind of a bit of a head scratcher. Like, wow, I didn't realize this could happen, and yet there it was. So everyone who thinks, complains right to the show, vol is so downside biased. You're correct, but it can have some moments to surprise you, to the upside. So yeah, some interesting nuggets here in this list. If you haven't checked it out, we included it in our show notes last time. Listeners, a lot of great weird periods you may not expect popping up. Like, for example, Andrew, you probably were out on the floor back in the the big back and forth Bush Gore, that whole period there where the market was rocking and rolling the end of 2000. Yeah, that's actually not even on the top 30 here. So that shows how many extended periods of vol we've had and how long they've lasted. Interesting stuff as we're cooking over here into the options themselves. It's been today, actually, despite the movement we've seen out there, not exactly a high volume day out there from a vol options perspective. VIX Options hovering right around 350,000 contracts, which is well south of their ADV, of course, only halfway through the day. So if it keeps going, they may meet that number, but not really a record week for vol trading, even though we did see some intraday vol and some very clear realized vol out there. People not really lighting it up out there in VIX Options most days, hovering around that 500,000 contract or so mark, which is well south of the ADV we've seen out there recently in VIX Options, with the exception of earlier this week on the 30th, which was, of course, Wednesday, when we saw some pretty sizable volume. Looks like a lot of it, Mr. Rock Lobster, tracing back to our old friend. Looks like our 1x2 friend, or perhaps his someone mimicking him in a great degree, coming in for some size again. Looks like he did this time the Nova 2026 1x2, selling the 20s, buying the 26s, about 74,000 by 157,000 times. So closing out the Nova side, and then skipping a step this time, if this is indeed the same paper, and it looks pretty similar, so it probably is the same guy. A little bit lighter on the volumes, that's why I'm thinking maybe it's not. But it's of course, he did hit a home run recently too, so maybe he's just keeping some of that in the bank for another day. He's skipping out this time, Mr. Rock Lobster, to the Jan 2230 call spread here. The vertical doing it 1x2, selling about 68,000 of the 22s and buying about 170,000 of the Jan 30 calls. So a little bit wider than normal, a little bit farther out than normal, a little bit different size than normal. Which makes me wonder, maybe perhaps our friend has a copycat out there, or perhaps he's just scaling back his size. Either way, Mr. Rock Lobster, when I look at these executions, I kind of have to just take my hat off to whoever is putting these trades up. You'd hope when you have this much size going up in a heavily institutional product like VIX that you'd have some pretty good hands on the tiller in terms of the execution. But you and I, how many times have you and I done unusual activity and just shook our heads at the terrible executions these clients are getting? This guy should really cut his broker a little bonus check here, because they split the uprights almost exactly on every single leg of this trade. And if you've been out there trading these products, listeners, and you know how difficult that is to do with size orders like this, it's so much so that it makes it a little bit difficult for our job to actually determine exactly what the impact was, what the intent was going on out there. So whenever we see that, you have to kind of take your hat off to him, Mr. Rock Lobster. So what's your take on our friend out here, maybe changing up his game a little bit out here, and also just on the degree of execution he's getting? I guess if you put up a few 100,000 contracts at a clip in the VIX, you can pay for some good execution. Surprise, how that works.
Exactly. Can you imagine that brokerage bill? That is not a small brokerage bill. That's not a small bill,
but I think they earned it on this one.
I think so. They, for whatever reason, the more size you do, it seems like the better fills you get.
Weird how that works.
Weird how that works. And taking the other side of it, I think Mark and I were talking about this guy. We don't know if this is laying off something else, this trade.
Yeah, it seems a little different. It's same architecture, different size, different layout. That's why I kind of was wondering if it's the same guy or something else related.
Or it's a part of a fund that has a strategy, kind of like some sort of upside back spread strategy. Mark was down on the SIBO and he got some info on this. I'd like to get what the straight dope is on this trade for sure. But
maybe someone else saw how much that 1x2 guy's been making of late, and he said, "I'm going to do that too." I'm going to dive it in.
Exactly.
I wouldn't blame anybody for that guy knocked it out of the park recently. He had some trouble in the early parts of summer where it didn't really go his way, but he was able to roll and not really take too much of a hit. And then when he was in there when the ball went his way, and it worked out pretty well. And so I wouldn't blame some others for saying, that's not a bad approach to doing this out here in the VIX.
Right. So, and I think he's looking at it again like, what the heck? I'll try it again. So I'll just keep trying these things for credits and see what I get. So it looks like some sort of credit back spread, but again, without knowing for sure, it's something I got when Mark gets back to Chicago. I know he'll be back down in the VIX pit. So we'll figure out what the heck they're doing. So.
One of those fun ones. One of those nice little head scratchers. We don't get to do a lot of unusual activity on this show, so it's kind of fun to bring it up every now and then. Speaking of which, I was looking at some trades going up yesterday as well, Mr. Rocklass. It looks like someone wanted to, again, execution very good. cutting the uprights pretty well here. And all these trades we're seeing, again, do some size, you get good execution. Amazing how that works. And looks like someone just unloading, apparently, all of their upside here in VIX land to the tune of ACH, at least. The ACH 35s, 30s, and 32 halves. Paper selling 41,800 of each of those yesterday. Looks like, just like I said, splitting the uprights, slightly bid heavies, which is kind of why we're looking at apparently these are perhaps closing open interest pretty sizable on all these strikes as well, again, which also complicates all analysis out there in VIX land. All these strikes have a couple 100,000 open, except for the 32 halves have 75,000 open. So it looks like perhaps Mr. Rock Lobster, someone giving up the ghost here on some shall we say, aggressive upside here in October, just dumping all their VIX upside.
And look at the timing. They're like, this is done.
Yeah, no more of this.
I guess we're only number 23 on the list here with our number 21 on the list with our days over 20 in VIX, but they, whatever the reason was that caused everything to go away, it seems like, maybe everything's not so bad in China. And this guy is just saying, sold. We don't care anymore. So that's quite a story right there. Quite a story.
And closing out the weird and wacky VIX options activity we saw this week. On the last show, Rock Lobster, Mark and I were kind of joking. We saw someone was putting up, it was the DEES 2035 call spread. And we were kind of just joking as to why you would sell that 35 call, because you weren't really getting a hell of a lot for it, and it was such a wide spread to begin with. It seemed like an odd choice, but we were kind of mocking it. It seems like they maybe have decided that as well this week, so I think they came in and closed out the lion's share of it for 285 for a decent amount of size. It seemed like it was trading actually back and forth a little bit there too, so maybe this spread has caught the imagination of some people. People say, hey, I want that DEES 2035, or I want to sell it. Either way, it's a bit of a funky one. 15 handle spread out there in the VIX, Mr. Rock Lobster. You see yourself legging into that one anytime soon on the buy side?
No. The 15 handle spreads in VIX. It's hard to make it. I don't know. It's hard for that type of stuff to perform. They look interesting, but I always feel like there's some sort of other strategy against that kind of stuff. But maybe that's just me.
Yeah, that's the case with 90% of the stuff we talk about out here in VIX land. They have something else on somewhere else, OTC, variant swap, etc. And that side is always a little bit more opaque, shall we say, in terms of what they're actually up to. Like I'm sure our 1x3 friend is up to something else elsewhere as well. He's not just putting on naked VIX options. So the most we can intuit, of course, is what's up in the VIX options side of the space, the listed side of the space. But it's always fun and interesting to try to intuit what's on the other side of the equation over there. And you're right, that spread probably has something else lurking on it. Still, that strike selection perhaps leaves a little bit to be desired, but maybe apparently not, given the volume I was doing this week. That apparently has captured some people's imagination, the D's 2035. Who'd have thunk it? As we're looking at what else was breaking out here this week from a VIX perspective, like I said, a bit of a weak from a volume perspective, the 30th notwithstanding. And you pull, VIX is kind of that same kind of beast. You pull a couple of those whales out of the equation any given week, and you're not seeing a ton of volume out there, at least, beyond what we've been seeing recently. And still light also on the calls over puts. You're not seeing that crazy call heavy love that we have seen out there in recent weeks. About actually right now, which is it's extremely light again. So maybe some of that call selling having impacted this. Of course, only 1.6 to 1 calls over puts. That's almost on the historic low end of the spectrum. That actually would be in the 27th percentile historically for VIX. As you know, if you follow this product for a while, it can get very call heavy very quickly, get well into the 3 to 1, sometimes over 4 to 1 calls over puts. So we're clearly on the low end of that spectrum right now. Perhaps that also indicates a little bit of people giving up the ghost on some near-term upside out there in VIX land. Overall, in terms of open interest, things are actually fairly strong out there, surprisingly, perhaps. About 77th percentile with about 7.8 million contracts outstanding. And looking at what people are actually trading, aside from some of these weird trades we highlighted earlier, what the hot strikes are, the big open interest movers and shakers right now. Jan leading the charge this week for the top 10 with the Jan 30s coming in at about 250,000 or so contracts open out there. So Jan taking some of that love, again, partially no doubt due to our 1x2 friend who I believe was playing on that strike. Yes, the Jan 30s, he did 170,000 of them. So a few whales tend to move the numbers a lot out here, despite the fact that VIX is a very heavy volume product. A few big movers and shakers, Mr. Rock Lobster, can set the course for everybody else. Surprisingly, it's been a while since we've seen this. The OC 20 puts taking the number 2 slot here with about 208,000 contracts open. It's been quite a while since we've seen puts really that heavy. We saw some puts going up earlier this week as well. They were the OC 18 puts. Looked like paper might have been buying those yesterday, actually, about 30,000 odd of those going up. Again, a lot of different prices splitting the uprights again there. But looked like paper was buying. So there is indeed some put love out there in VIX land, which is weird if you've been following VIX for any given time and to see a VIX put on the number 2 slot here on the top 10 is also extremely rare. OC 30 calls, number 3, about tied with those puts, 208,000. Then the NOV 20s, number 4, with 193,000. Then we drop off a bit. OC 20s coming in, number 5, with 178,000. And some more puts. The second put on the list, the OC 14 puts with 176,000 contracts. Then we round out the top 10 with the NOV 30 calls, NOV 26 calls, OC 35 calls, and Jan 22 calls with 176, 164, 162, and 162, pretty much 1,000 open, respectively. Again, those Jan 22s also, and the NOV 26s, and the NOV 30s, all a result of our friend swapping some 1x2s out there. So a lot of paper on those strikes, a lot of interest on those strikes. Again, about 7.8 million contracts outstanding. That's in the 77 percentile or so out there. Moving on to, of course, some other areas of the market that have been exhibiting volatility these days as well. Mr. Rock Lobster, I know you guys out over there in the pit like to look at some GLD from time to time. You've been a fan of the shiny metal out there. I think I've said it before on this show, but I'll mention it again. I think one of the more well-timed guests we've had on this network in quite some time was the long and short of futures options episode we did. We of course, do that show with the CME. We did that show a couple months ago with one of their economists who put out a report called Gold Storm on the Horizon, and that pretty much a report came out, I believe, middle of July, about July 15th or so. And if you were following gold, gold implied vol went from about 12 or so up to about nearly 20 in the span of like the following week, I believe it was. So it was very well-timed stuff. And what he was breaking down in that report essentially was, implied vol out here in gold right now, the big gold futures options, of course, what they look at, is on the historic end of the low side of the spectrum, which could imply perhaps something it could be afoot soon, and he was right to the tune of about a week, which you don't see too many economist reports coming out with that level of timing. Of course, gold has been rocking and rolling out there pretty much ever since, coming off a little bit of late. And looking at the numbers for today, we're actually seeing a bit of a gold rally, about 2 handles out there in your beloved product, Mr. Rock Lobster, the GLD. Looking at the big, of course, the gold futures options as well. The term structure out there reflecting a bit of a hefty vol bid, pretty much across the board. A pretty steep contango out there, showing that they're saying longer term, they're still seeing this vol not really settling out anytime soon. In terms of they expect it to be around here, I think, for a little while. Mr. Rocklops, I know you don't play in the big futures options, more in the GLD realm. What's been catching your eye out there from a metals vol perspective over the past week?
Well, the vol got pretty low in there, number one, the near-term vol. It's starting to drop back to those real low levels again. Gold's one of those things that it doesn't trade. The vol doesn't really jump until the upside jumps. I'm looking at this rally, and you've got the last 4 peaks in gold since May at around, in the GLD, it's like around 117, 115, 111 last, and then we just traded 109, and now this last peak here, or I guess somewhere 110, 111, and the latest peak is 109. So every time there's any sort of QE fueled whatever, the rally in gold is less and less and less. And I think that's why the shorter term vol has come down in there so much. And I wouldn't be surprised if gold gave up whatever its gains were today, just like it's done the last 5 times in a row.
It has been a bit of a heartbreaker of late, has it not?
Yeah, it's just there's no the strangest thing about everybody, there was that huge crowded gold trade a couple of years ago when everybody thought all this printing was going to create runaway inflation, and it looks like all it's done is created deflation, because none of the G7 economies actually did what they needed to do. They just leaned on all the central bankers. So whatever policy mix they have is not enough to fuel growth. We didn't get the, consequently, we haven't gotten the inflation that everybody thought we were going to get. So now we just got to deal with a lot of debt and deflation, and gold is not showing that sort of upside spark, as it were, at least right now. At least that's what it looks like. That's my looking in the rear view mirror and seeing what's just happened. So, yeah,
the longer term of the term structure, of course, displaying some bid, but you're right. The near term is very steep, having come off quite a bit. Looking here at the gold futures options, they're hovering right around in the front area there, about looks like a 13 to 14 vol range. GLD a little bit higher, but similar range, about a 14.8 or so as of this morning, as of the 30-day implied vol out there. 30-day historical, a little bit richer, as you might imagine. It's been rocking and rolling of late, but hovering about a 54 or so out there in good old GLD land. And not surprising, GLD has been lighting it up from a volume perspective of late, with the options in about the 80 percentile right now. So pretty strong, and open interest hovering in the 90 percentile right now. So a lot of people out there playing in gold. And you're right, Mr. Rock Lobster, a lot of them have been probably very heartbroken of late, because you and I both know, as bad as Apple was at its height with the zealotry and the fiendishness for that product and people having to bid up the volatility skew, gold always has that strong base of the gold bugs, and they will not be dissuaded. And so for those people, this must have been a difficult period, to say the least.
Yeah, they're just getting consumed. I'm sorry, but that GLD was 130 last year, 120. It hasn't been able to stage any kind of sustained rally, and where does it go? I have no idea at this point, but all I can say is it can't make new highs. It hasn't made any new highs, and the deflation picture, unfortunately, looks a lot more compelling than the inflation picture, at least for that product right now.
Yes, it seems that way. And again, if you're interested in the volatility structure out there in gold, I encourage you, if you haven't checked out that episode of the long and short of futures options that we did, check it out. It's pretty interesting stuff. We get into a lot of the deep structural issues that drive vol and indeed drive price out there in gold. And of course, it's a little bit beyond the initial prediction now of gold implied vol is too low, because we've seen a bit of a pop out there already. But taking that out of the equation, it still is a very interesting conversation on what really drives vol. What are some of the structural drivers of the cost of gold in terms of production and all that stuff you see going into the actual cost of the raw material. Interesting episode if you're a gold bug, or just maybe want to be one out there, as we turn our attention to the other side of the commodity spectrum that's getting a lot of love, a lot of heat, a lot of attention these days, of course. The black stuff, the crude, the shiny black, shiny deep Texas tea is what I was going for there, Texas tea. The dark, thick stuff, indeed, the crude. This one has, of course, been of interest to a lot of people for the better part of a year now. We're coming up almost on the 1-year anniversary, Mr. Rock Lobster. Indeed, if we haven't already passed it, of when this pronounced sell-off really began out there in crude last year. And at the time, a lot of people, I think myself included, I thought that we had, there was a floor there, certainly in the 60 handle, if not a little bit higher. And we saw volatility skew and options positioning accordingly, of course, and everyone pretty much getting burned when we broke through that 60 handle to the downside. You could see in the commitments of traders reports just how much of a bloody stain that left on a lot of the traders out there who were convinced that was the support, that was the floor. And of course, we are seeing crude hovering still again in those low ranges. Haven't seen OIV or OVX really picking up much over the past week. The product's been moving a bit, but the vols actually seems like it's been creeping out a little bit out there. Both of them hovering right around the 45 handle, which, as you know, if you've been following any of these products recently, is on the lower end of the spectrum. Both of them recently gapping into the 50s and even some of them into the 60s out there in early September. So about a month ago, hitting the 60 handle out there. So both of them coming off a little bit. Andrew, Mark, when he's on the show, Mark and I always like to mock that now very dated Goldman prediction from we have to go out and buy vol out there in the, I believe it was downside puts out there in crude, because they were specking on vol being dramatically underpriced, which, as we've seen over the past few months, has clearly not been the case, and also a big aggressive downside move south of the 40 handle. Indeed, they recently upgraded that to perhaps even hitting the 20 handle out there in crude. None of that has really come to pass. But what's been catching your eye out there from a crude vol perspective? It could be crude, or it could be, I know you like to play in the ETFs a lot, so I will even deign to allow you to discuss USO on this program, sir.
One thing I think is just production. All the production cutbacks are kind of sharp, So that was definitely a good, that kept, I think, the Goldman prediction of $20 oil from becoming true. But it happened so darn fast, how they took that stuff down. So, but we'll see if that, if it comes to pass, essentially. But volatility definitely is coming in oil, because the range of oil, there's really no rally, and the big downside, just all of the range of the whole product just basically died. And we'll see how long all that lasts. But I don't like what's going to make oil rally except for the Russians messing around in Syria. I mean, if anything's going to make oil rally, it's that.
They're doing their darndest on that front at the moment, so we'll see if they can keep that. Never undersell Putin's throwing a wrench into the works. He likes to do that. He
seems to be his real gift is to do that. And oil, it hasn't been able to make any really great moves. So, and I think that's kind of where it stays. Not seeing any huge reason for it to do anything really. I mean, if the shale producers here have chopped production so much. And that's probably why the jobs report wasn't too great either, because the fastest growing part of our industry just stopped growing.
That's where the real story has been in crude over the past few weeks. Certainly just all the just amazing and deep cutbacks in exploration and production that we're seeing as a result of this protracted period of cheap oil. I mean, people love cheap oil, and I'm one of them. Certainly, I think we all, as a society, are inherently short oil, so we all have a smile on our face when it drops. But this is some of the other side of that shoe dropping, of course, which is there's not much money to fund these crazy exploration, like Shell just announcing they're cutting off their deep Arctic exploration after spending $7 billion out there. It's not cheap to go look for oil in these far forgotten reaches of the world, and no firm really wants to finance that right now, so that may have some implications for farther off down the term structure. But right now, at least, we're still hovering in these same levels, and Vol kind of doing what it's been doing over the past week, because not a heck of a lot of direction or movement really one way or the other out there in crude. So we'll keep an eye on that one as we keep on rolling with the program. We got a little bit of time here. I want to make sure you guys get your time on the program as well. So without further ado, let's dive right on into some volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Like the man said, this is the portion of the program where you guys get to join us here on the old Volatility Views program. Make your questions, your comments, your insights known, not just to us, but to your fellow listeners as well. Going to kick things off with a frequent commenter, questioner, Mark B. He writes, hey, being afraid of selling week one implied volatility is just wrong. We're traders, not market makers. Gamma can't hurt us selling tight vertical spreads. He wrote into this one. I'm not sure if we addressed this on this show or another program recently. I'm not sure we ever said we were afraid of selling week one implied vol. That said, calling anything week one implied vol is kind of a bit disingenuous. We all know it's a gamma beast out there at that point. He writes here, not incorrectly, that gamma can't hurt us when selling tight vertical spreads. It certainly can, but he has a bit of a point, Mr. Rock Lobster, that perhaps if you could keep things risk mitigated in that front week, it's better than the opposite, shall we say?
Yes, I mean you can still get hurt.
You can always get hurt.
Spread for 50 cents and it goes to $2.
You can always get hurt.
I don't know if that's not hurt, but I don't even look at volatility in the first week. Unless you're doing something very kind of, we'll just call it skew intensive. Gamma is everything in you sell anything and it's always a crapshoot. But I see what he's saying. I'm just going to go in there and I'm going to pick a direction and I'm going to whack out these short-term trades and let it all melt away. And there's a lot of times that works. And then sometimes it doesn't, but the spread helps tremendously.
Yeah. Never underestimate your ability to be hurt. You can always be hurt. So that's one thing. If you've been trading for a while, you learn to have that respect for the surprise sucker punch coming out of nowhere, because they come out. Look at just recently over the past few weeks, how many of those we've seen coming out of China and elsewhere. Just to remind us not to be complacent. We were joking about Putin earlier. He certainly has that ability lurking up his sleeve as well. So a lot of potential surprises lurking on the horizon. But yeah, in general, I think we concur with your sentiment. All right, moving on to, we got a bunch here. Let's see. How about, this is kind of an oldie but a goodie, raising its head again here, Mr. Rock Lobster. This one comes from, listener goes by the handle Noodles. I like that. He or she writes, hey, VIX, the tail or the dog? Hello, Vol Squad. I was just talking with a few of my trading buddies, and he puts in parentheses, all VIX options traders, and they were complaining that VIX doesn't represent SPX volatility anymore. They said it is its own beast, a little hard to read here, now because so many people are just trading VIX and VIX products and not SPX. I thought I would put it to the Vol pros to settle the debate. Incidentally, I also turned them onto your program in the process. Well, bonus points for me. Your insight would be appreciated. Well, indeed, bonus points for you, Mr. or Mrs. Noodles. We love when our listeners go out there and they spread the love to fellow listeners, because the more the merrier. We love having all you guys on the program and, of course, listening and writing in with your questions. And this one, like we said, we've kind of if there's been an ongoing theme to this program over its kind of 4-year period, this would certainly be one of them. The debate of whether, VIX was created, of course, as this direct implied volatility of SPX. It was, of course, updated in 2004. I love how, by the way, I keep referring to that as new VIX Rock Lobster when it's about a decade old now at this point. But that said, the new iteration of VIX was, of course, changed from the OEX to the SPX. They incorporated skew and a few other things into that to make it a little bit more relevant. Of course, if you're one of these other people who doesn't like the VIX skew, maybe you don't like that. We'll get to that in a little bit. There's some question about that as well. And so now we have this new beast. Then, of course, once they did that, once they listed the futures and indeed the options, we saw this universe of ETPs like VXX and XIV and you name it out there listing different iterations and variations that are related to VIX, but not exactly the same thing. And a lot of people have said now for quite some time that has turned VIX itself into kind of a little bit of its own beast. We see these questions a lot, mostly when on days and weeks when we see VIX tending to diverge a lot from the S&P. People have this inherent perception of VIX being one-to-one negatively correlated to the S&P. Of course, that is not the case. I think if you break it down, it's more in the 0.7, 0.8 range. So that quarter of a percentage point or so where it's not really, or a quarter of a point or so where it's not moving in the right way that people expect, that's when these questions start to come in. And this is kind of an old one. We've kind of debated it before, Mr. Rock Lobster, but where do you fall? Refresh our listeners' memories on where you fall on this kind of heated debate. Do you think things like VXX and all these others, and again, these are feeding back into the mothership product, though. They're hedging with VIX futures, they're rebalancing with VIX options and futures, so they are driving paper back into the main product itself. And sometimes I think that's lost in the conversation a little bit. They're not just kind of completely their own beast. But do you think these things are driving VIX to be, shall we say, perhaps a polluted indicator versus something like perhaps a V stocks, which perhaps doesn't have this universe of ETPs, hasn't been as successful, hasn't created this universe of products that are feeding off of it, and as a result, maybe some people claim at least the more pure indicator?
Well,
a lot to unpack.
What I
there.
do is when we do, like, from an education point of view, we separate all the products out. So the VIX Cash still represents the SPX options. That's what it does. But all the VIX options are trading off all the futures. So unless you have your sense of what the futures are actually trying to price, kind of versus the cash, then you're not going to trade any VIX options very well. And all the ETPs just flow off of all of the futures. So you almost trade, I know this is going to sound crazy, but you're almost trading 3 different things, and I think it's sometimes almost 4 different things, which is what we do kind of in our education programs is, you've got the VIX is basically giving you the look at, how the options are trading and how skew's performing in the S&P 500, right? And then the futures actually look at that VIX number and decide really how much they like that current implied vol. Like we've just been talking about a backward market for a whole month. So they're looking at that higher volatility, but can't quite push futures higher than that, right? Not accepting that we're going to have sustained volatility, even though we did. And then you have the vol products, which continually churn a bunch of volume in the VIX futures. And then you have obviously the options on those. So you've got different pieces. So what you have to figure out is, exactly what part of this structure are you going to trade? Are you going to trade volatility, in VIX using the SPX? Are you going to trade the term structure and the skew or trade VIX futures? Are you going to trade the vol products as basically like a pure Vega product? You have to decide what you want to do. And then you have to understand how the futures work versus where the cash is and how that settles and what are the tendencies. So there's so many things that are actually going on. Of course, it's a great place to be an educator because education helps a lot in that space. Once people kind of understand how it works, they have a much better shot of succeeding because you're actually using the right product at the right time to get to get the strategy on that you're looking for. And I think that's probably what Noodles is having troubles on is, you have to make sure you're trading the right. If you have an opinion about something, you have to make sure you're going to the right product now to express the opinion.
I think that's what gets lost in this conversation a lot, too. We heard this a lot from people like Mr. and Mrs. Noodles. I love that handle. If you do have that opinion, and that could be a perfectly valid opinion if you feel VIX doesn't represent what you want, you do have options. You can trade straight up SPX vol if you want it. If you think that's what you want, pure SPX vol, it is there for you. SPX trades, or if that's a little bit too meaty for you, then you go to SPY. It's a pretty direct analog there, and you're getting the straight up vol. Then you don't have to worry about this other stuff. So if you want that straight exposure to S&P vol, it's there for you. You don't need to mess around with these, as Rock Lobster was saying, these almost derivatives upon derivatives, and it gets very confusing for some people. So if you want the straight beast, go for it. There's no reason why you need to play around with these products if you don't think they're delivering what you want. If they're not giving what you want, find something that is. And sometimes the straight shot is the best way to go. Keep it simple, stupid. It often works in the world of options. Let's see, we got time for one more quick one here. This is a comment coming from Joe S. He writes, hey, with regard to the listener who wrote in looking for a good quick vol calculator, I find the Greeks breakdown on TOS, good old Thinkorswim, to be particularly informative for my trading. Maybe he should try a paper trading account there to see what he thinks. Hope that helps him out. Rock Lobster, we had a listener write in last week asking, hey, do you have like a quick shorthand methodology for finding your implied vols? How much? I think the question was how much of an options price is attributable to the implied vol. So I, of course, walked him through the shorthand of looking at the opposite option on that strike, the out of the money option. You can just see it right away and quick, all extrinsic value right in front of your face. But I think he also wanted some platforms too. So the TOS platform, not a bad suggestion. You and I have used it a lot. We used to use it on our Options Oddities program on a daily basis, so we're pretty familiar with that. And aside from the shorthand of just pulling out the extrinsic value, some other platform suggestions. Whenever I'm doing stuff like these shows and I need to have a lot of quick stats at hand and pull up things like Greeks or volume statistics really quickly, I like to run a live vol on the side. That's a platform I mentioned before here on the program. And again, that's an extra fee. It's going to be outside of the cost. You get this stuff from your broker for free, so you may want to stay with that. Live vol, I believe, is around the $300 a month or so range. But if that sounds good for you, if you want these kind of stats on a really kind of quick, and you just want to drill down into the options, you don't want to deal with, here's your mutual fund screen, here's your stock screen. You just want to dive deep into the options like we do here on this program, then I find that to be one of my favorite choices. Mr. Rock Lobster, any other suggestions from our friend here? For our friend last week, I believe the handle was like MM21 or something like that, who wanted some suggestions for good platforms that give him a good, handy, quick breakdown on Vega and the vol of an option.
Well, those are some of the better ones that you just mentioned. Live vol and TOS still are really helpful. You can try Option View still. A lot of our clients like that. Kind of the old school Iron Condor people.
I was going to say, that one's been around for a while. I haven't played with it in a long time. Is it still holding up?
Yeah, it still is. They like it. It's you get used to what I would say to Joe is just whatever platform you have, you kind of get used to it and then kind of stay there because you don't want values jumping all over the place. And I think that's a good thing to keep in mind. Stick with a platform. And so, they're going to have what the model they use and kind of the particular calculation. You just want to make sure you're kind of keeping the sort of the apples to apples comparisons going when you're looking at volatility moving around.
All right, good questions, good comments, as always, as we expect from you guys. Unfortunately, that's all the time we have for the vol voicemail for this week. Get those questions and comments coming. We'll get to you on another episode. Meanwhile, it's time for us to keep on rolling into our final segment. It's time for the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the Crystal Ball.
All right, everybody, welcome to the Crystal Ball. Like the name implies, this is indeed the portion of the program where we dive deep into the volatility ether attempting to divine what the vol gods hold in store for us. If you know, this has been probably the more challenging portion of the show for the past month or so, as vols have been kind of interesting. You know, we've kind of been leaning on the vols probably going to stay elevated, I believe. On last week's show, we were hovering right about this level, by about 22. I believe I came in and saying we might be a little bit lighter in like the 20 to 21 handle. Mark came in and said a little bit higher in the 24 range. Looks like we split the difference right around 22. We're pretty much almost unched from where we were this time last week. So both of us equally in the wrong direction. But this week's a little bit different beast. We're starting to see, like we said earlier in the show, that term structure coming off a little bit. We're actually back in contango for the first time in at least a month out there in the VIX future. So that could perhaps bode for some more vol erosion coming off here in the near term with the VIX Cash perhaps finally breaking its 20 handle streak. I may just go that way, Mr. Rock Lobster, just to kind of be a little bit contrarian here on the program. We've been talking about an elevated VIX above 20 for some time. I'm going to say it. I'm going to say the time is done, and we're going to be, this time next week, I'm going to say we're going to be south of 20. Not crazy, I don't think. Probably not in like the 14, 15 handle. I would say probably I'm going to go out and say 18. Where do you fall, sir? You going to say 32? You going to try
I'm not
Jane, you ignorant slut me?
I think 18 is hard just because we're still moving so much. But I think we'll touch 20. But I don't think we'll go too far below that next week.
Gotta go out on a limb sometimes, sir, on the show.
20 touch. I would love to say 18, but I don't see it. We're moving like 2% a day almost. I just don't see 18.
You're right. I'm not saying it would be completely merited, but I have seen weirder things out here in VIX land. And of course, sometimes on the show like this, it makes it fun to have a diversity.
Up there it could happen.
What was that?
If we trade like as high as 1970 in the SPX and we kind of just sort of slowly grind up there every day, it could happen then. But
I mean, hell, we could see that today if we keep rallying the way we have been. This could break 20
today.
Seems
like it's dying. Everything looks like they just hit the stop button.
Yeah,
we'll see how long.
It seemed like a lot of that bid that was left in there was for non-farms. You saw non-farms come out today. There's still some sort of indescribable Yellen Fed premium in there, but I defy you to point to it to me and say exactly quantified what it is, because no one really, like we said, no one really knows what the hell they're doing. It's out there, it's lurking, but it's very mysterious at the moment. So those things aside, of course, we do have earnings coming up and not too long in the distant future, so that could set some things off. And of course, we saw some of that commodity news earlier this week, sending some row into the market. And of course, we had China mixing things up. So we always have these extra wrenches that could come in. We mentioned Putin earlier. They could all shoot us back up to the north again. But I'm gonna go on the flip side of that and say we're gonna finally break out of this elevated trend. We shall see. Mr. Rock Lobster going the more mitigated, just a brief flirtation with a 20 handle before we rally back up to 47, I believe you said. And to put a word or two in your mouth. And I said we're going to break the 20 handle and stay there by this time next week, maybe around the 18 level. We'll see what comes to pass. These are some fun weeks for vol prognosticating. Unfortunately, we'll have to leave it there for this week. But before we go, really quickly, Mr. Rock Lobster, if listeners want to learn more about what you folks are up to over there in the land of the pit, what should they do? Where should they go?
Surf on over to optionpit.com /mentoring. You can see all our programs, what we do, how we teach people about volatility, all that kind of stuff. Tomorrow is our day 4 of our boot camp, and it's a good opportunity for people to basically get let's just call it an intensive option training. So there you have it.
I'm looking forward to your VIX Verticals boot camp, where you too can learn how to buy the Dees 2035 vertical if you want to. Good stuff. I'm looking forward to that one. I think that'll be a huge home run for you guys.
It could be. You never know. That could pay.
You're right. You're probably right. Given the volume that spread's been doing and just how crazy VIX paper is in general, that might actually be not be a bad one to think about there.
It could happen.
All right. And before we get any crazier, we're going to shut this thing down. On behalf of the Rock Lobster and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, however you listen to the show. We welcome you. And of course, for sending in such great and insightful and sometimes oddball questions. We love them all. Keep them coming. And we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.